Hello everyone, welcome to Bitcoin Not Crypto. You can find me on Twitter at ForestTotal. In today's video, we're going to be going over the news of Strategy's new $2 billion convertible bond offering. I'm going to go into the details of that and what it means for the future of the stock price of MicroStrategy and much more. However, before I do, I want to just have a word from the sponsor, and just remember the best way to support this show, if you've been gaining any value from it, is to check out the sponsors in the links in the description. Today's video is brought to you by my good friends at the Bitcoin Way, the team who specializes in helping you become fully self-sovereign. The team has over 25 years of cybersecurity experience and offer the premier white glove service to walk you through proper 100% self-custody of your Bitcoin. It's absolutely critical that you are taking full control of your wealth and avoiding all counterparty risk of sharing keys with a third party. The Bitcoin Way will walk you through step by step exactly how to secure your Bitcoin, run your own node, manage UTXOs, and even tackle inheritance planning. The best part? They don't KYC you and never know the size of your Bitcoin stack, so you can learn to protect your wealth with complete privacy. The team can also help you upgrade your personal cybersecurity, set up a privacy phone, or even establish a Plan B residency. So, if freedom is what you desire, head over to thebitcoinway.com/forest or click the link in the description below to schedule a free 30-minute consultation with the Bitcoin Way. Don't delay. Your generational wealth depends on it. And again, that's the bitcoinway.com/forest, or just click the link below. So February 18th, 2025, Strategy announces its new private offering of $2 billion of convertible senior notes. Now, what a convertible senior note is it's senior to the equity, which means that in a liquidation, bankruptcy kind of event, that they will get paid out before the common shareholder would. And so that's what makes it senior. It's convertible because it can convert into common shares at certain prices, and it is a bond instrument. So there are many people around the world that are forced to buy bonds, and they're forced even to buy convertible bonds. All right, so right off the bat here, Strategy announced that it intends to offer, subject to market conditions and other factors, $2 billion aggregate principal amount of its 0% convertible senior notes due 2030 in a private offering to persons reasonably believed to be qualified institutional buyers. And so that means that you and I aren't just going to be able to buy these. We have to be qualified investors. Most of these people buying these will be institutions. Now, we've seen this in the past, these 0% interest rates, and I'm actually going to bring up all the debt that Strategy has right now. And you can see this, they have two other bond offerings that are also 0%. And even these other ones are mostly under 1%. This 2032 one is 2.25, by far the highest coupon rate on the convertible bond. So so this is the third bond that they'll be offering at a 0% rate. So it says here that within 5 days of purchase, they can also add an additional $300 million of aggregate principal amount of notes to the buyers if the buyers want them. So they can upgrade this $2 billion convertible note offering to $2.3 billion. So this is just kind of the first press we've seen about this. There might be some changes in this, and it says that there is no assurance as to whether, when, or on what terms the offering may be completed. All of these things can be changed before they actually happen, but likely a lot of this is how they will actually happen. Okay, so it says the notes will not bear regular interest and principal amount of the notes will not accrete. The notes will mature on March 1st, 2030, unless earlier repurchased, redeemed, or converted. So if we look again here, they have their ladder of debt. They have only one of these tranches of convertible bonds converting, or their convert date every single year, but they've actually forced conversion before. And what you can see here is the conversion price. So this is the underlying equity share price. And we can see that there's only one of these where it's not in the conversion price yet. So if you're a bondholder of these converts, of anyone but this one tranche of 2029 convertible bonds, you could convert into common equity if you wanted. So there's that, and there's also a clause which I will get into now where strategy can actually cause conversion as well. So in here we have a early conversion clause at strategies able to basically early convert after March 5th, 2027, and or before the 20th scheduled trading day immediately before the mature date, but only if the last reported sales price per share of MicroStrategy's Class A common stock exceeds 130%. So 130% of today's share price is $585. I think that's probably highly likely by March of 2027, except this one here in 2029. All these other ones are able to early convert. The initial conversion rate and other terms of the notes will be determined at the pricing of the offering. So we kind of have to go off of previous information on what we think that will be, because we don't have that information yet. And Ben Workman here, who's a real savant when it comes to strategy convertible bonds, he estimates that it will likely fall between 35 and 45% range. And a commenter here did the math at the kind of conservative premium of that of 35%. That would be at a $450 share conversion. And the reason that it's probably going to be a little bit lower on that range is because of the implied volatility being in a low right now. So strategy really needed to create some debt on their balance sheet. They're under levered. If we look at Strategy's debt and preferred compared to their Bitcoin NAV, they are actually only at 16% debt compared to all of those assets, all of that Bitcoin that they hold. And their target ratio of debt to Bitcoin NAV is around 25 to 30%. So they're actually almost half, just a little bit over half right now of the amount of debt that they need. So they really wanted to, and Saylor talked in the past about levering up this company and adding more debt and to acquire more Bitcoin in the first quarter of this year. So they were running out of time to do that. And the other thing here is this isn't exactly the most opportune time. MicroStrategy, as you can see here on this daily chart, has been having kind of smaller candles, a lot of sideways action. And you can look down here at this volume chart. You can see actually the volume is pretty low compared to that huge amount of volume that we had. And even prior to November, we had a lot more fluctuation and volume and you know, larger kind of ups and larger downs than we've had right now, which is that volatility that we're looking for. And with these convertible bonds, a large part of the value of them is the conversion, and that value goes up if the volatility of the underlying, which in this case is MSTR, is high. So the volatility is relatively low right now, which means they cannot get as favorable of conditions when issuing these convertible bonds, because they're intrinsically worth a little bit less than if they had more volatility with the underlying. So it's not ideal timing in that way, but it's ideal timing in the fact that Bitcoin is still under 100,000, which is crazy. It's still Q1. They are under levered, as I stated. So they needed to do this kind of sooner than later. And there's also the potential that this can create some more volatility within the stock, because what this does is debt is perceived as risk. And it kind of is risk, right? But you know, we can look at the debt ladder and say, like, you know, how risky really is this when they can pay it in shares? They're way past all of these conversion prices. And when we evaluate MicroStrategy, we're doing it on a fully diluted basis, including all of these converting into equity. So what they're able to do here is they're able to acquire a lot of capital, a lot of cash that they're bringing into the present from the future, and they're paying it back whenever these bonds convert. So they're paying it back way later in the future when that cash is lost purchasing power and the Bitcoin that they bought currently in the present has increased in value. So it's a genius strategy. People say, oh, it's an infinite money glitch, or other people say it's a Ponzi scheme. It's really kind of a reflexive flywheel is a better way to explain it, because one action helps the other action. The fact that they've acquired capital now and bought Bitcoin with that helps them in the future when they issue more convertible bonds. So the convertible bonds help them issue more convertible bonds. It's a kind of an interesting strategy and something that is very difficult for a lot of people to wrap their minds around. That's for sure. So I think that by doing this, it's going to have some effect on Bitcoin's price. Bitcoin's going to understand that there's this large bid coming in for over $2 billion, which is pretty significant. And Bitcoin will probably rip up a little bit to kind of bring out those buyers, right? And strategy has talked about not trying to affect the market as much, but the thing is by announcing this and by buying, even if they do it OTC and all this kind of stuff, it still does affect the market. They're just doing everything they can to affect it as little as possible, but it's still going to affect the market. So this will increase the price of Bitcoin. This will, in my opinion, increase the volatility of the stock because people are seeing that there's more debt and on their balance sheet, upping that 16% up higher. So what I've done to position myself is if you follow along on my Sunday live streams, you can see that I've actually opened up some options. And the reason for that is because Vega, which is one of the Greeks that is associated with volatility, I think looking at that, it's under the normal amount of what I think. So the volatility that I think that them acquiring debt and the potential for Bitcoin to rise and create more volatility with the underlying, which will increase the volatility of strategy, this will go on to the value of those options. So that's how I've positioned myself. It's definitely not financial advice. It's just something that I've seen in the past couple weeks, trading weeks. I've seen that MicroStrategy has been stagnant. I've seen that the volatility's gone down, and I've seen option premiums decrease a lot. So in my opinion, it's a buying opportunity. Now, I think that buying opportunity will pass very, very quickly. And that's, again, another reason why it's not financial advice. I did this a little while ago. I already bought this. So copy trading any influencer here on YouTube or anything is just a terrible, terrible decision because you never know when they're actually buying or when they're selling. So I'm trying to be as upfront as possible, but with that, I will just say that is how I'm positioning myself to benefit from the increased volatility and what I think will raise the price in the short term of strategy, because they're going to acquire a ton more Bitcoin for this debt that they're paying 0% for, and they will end up paying with cash raised by ATM or equity itself in 5 years, right? So it's super far off in the distance, and who knows what Bitcoin's price will be then? Who knows what strategy's price will be then? They might not have to sell that many shares to be able to pay off this debt that they've used to acquire a ton of Bitcoin today. If they bought this Bitcoin for $95,000, they would be able to acquire 21,000 roughly Bitcoin, which is a huge amount for their balance sheet. So here's a tweet from Bitcoin Overflow. This guy's absolute G when it comes to strategy. Great follow. I would definitely recommend following him on X. He says, so I was planning to post before Strategy announced the new CB today that if and when it was announced a new CB, the setup reminds me a lot of September 17th. So convertible bond arb traders placing their initial shorts into similar levels of complacency could create a buying opportunity. Okay, so what does this mean, right? Now, my interpretation of this is there's a lot of buyers of these convertible bonds, and they're arb traders. So what that means is they trade the delta between owning the convertible bond and selling short the shares of strategy, and then either buying back those shares or selling more of those shares depending on the price movement of strategy. So they make the difference in those movements. And so what this initially does, however, is if arb traders are the ones that buy these convertible bonds, they need to sell shorts right away. So they need to sell shares, which adds sell pressure into the market and will actually depress the price fairly significantly, potentially, depending on the liquidity in the equity market. So have they acquired their shorts ahead of time? Are they going to acquire them now? Will we see some price action to the downside as these arb traders load up their shorts, depending on how much bonds they could buy? That's something we're going to have to see. So it's possible that in the short term, we could see some price to the downside until the arb traders are fully loaded with their shorts and these new convertible bonds that they hold. So it's going to be interesting. It could go either way, right? None of this is a guarantee. But in that case, it's potential that that's a very good time to buy and do the opposite of shorting, like these arb traders are. However, they're delta neutral, so they hold the bonds as their long position and they hold equity short, and they just balance those things out and make the difference in price depending on the movements of the equity. So there's just there's quite a lot actually going on with this bond offering. It's an interesting development. We knew it was coming. I've been talking about it for a while. Every once in a while I mention how they need to do a convertible bond, and they're doing it. I think they'll do another one. I think that this is, they have multiple bullets in the chamber, so to say, and that this is just the start, right, to the new year of strategy. And I think that putting on some more debt on their balance sheet will ultimately be good for them, as we are still in a bull market and we are still going up this year. That's for sure. In my opinion, that's for sure. If you guys wanted to skip this whole strategy thing, just get yourself some cold storage, self-custody Bitcoin. The way I do that is using Bitcoin Well. They have the smallest spreads, smallest fees, and they're available in Canada and the US. They have an OTC desk for people purchasing over 50K, and they have non-KYC options available. And I use Stampseed to protect my private seed phrase, and I have a discount code that you can use. All that information's in the description. Thanks everyone for watching, and we'll see you on the next episode.